Shankar, hi, good afternoon. Do I see a shirt on you? I thought you were going to go topless, going by your tweet.
I'm not yet Salman Khan, Ayesha. Right.
Okay, 4 pack to
Yeah.
6 pack, getting there. Okay. But Shankar, the question on everyone's mind is it abhi the party shuru hui hai or is the party now and after party? How long in the bull cycle or what stage of the bull cycle are we in currently at?
So I think we are still mid stage. We are definitely not end stage of the bull market. It's obviously not early because large part of last year's move was the first stage of the bull market. So by no means can I say that this is a late stage bull market. It is still a fairly middle aged, something like me, bull market, which may not be as sprightly as 20 years back, but hey, not bad still. So, in that context, obviously, when you're in your middle age, you need to be careful. You can be more carefree at the early stage, like in life or in the bull market. Similar in the markets, that be a little careful, but there's no need to be extraordinarily cautious because it's still got legs ahead of it. So I'm pretty uh, clear that this is nowhere close to topping out. There might be some big correction crash. I mean, all that is part and parcel. You can't rule that out, but it's not going to be a bear market anytime soon.
Well, I must say, if you're aspiring to get that six-pack ab like Salman Khan, you're pretty much sprightly for your age as well, Shankar. But anyway, jokes aside, just wanted to know, since you did say that maintain slight bit of caution, or at least that's what I can gather from your commentary. Where is it that you feel the market is getting a little bit frothy?
So obviously, this froth has been in the broad market, if you can call it that. I don't want to call it that because small caps or mid caps have had a very long winter in the wilderness from 2018, 19 up until March of 2020. The 2.5 years of very tepid performance, frankly down 25-30%. So you're coming from a history, that is a recent history of very poor returns. So when you go from that poor return situation, you can have a very extended period of supernormal returns, which is exactly where we are. So there is obviously stocks have gone up like crazy. Some of them are probably unwarranted, but you don't need to be going out there and buying very high risk. You can still buy decent companies, and you can make decent returns even in this market. I'm not saying you're going to get value, but there is enough places to make money. For example, we bought real estate stocks. So, let's say DLF, I think 3-4 months back. I mean, that's been, I think 30-40% returner in 3 months' time, which is far ahead of the ones that did well previously, which is the pharmas and the ITs. So there has been rotation away from those to some extent into relatively more, real world, terrestrial, going out businesses, PVR, Inox, they've started doing very well. So all those companies where we have like moving away the needle somewhat from the ones that did very well. Utility stocks have done very well. So we have kind of realigned ourselves, and that's worked out quite okay. So you can play this market even now if you play it sensibly. It's not by any means 100% froth.
Hi, Shankar. Good afternoon. This is Nantara. So, since you talked about DLF and real estate, I want to ask you, in real estate, after the run-up that we've seen, especially this week, is there still money to be made? Because one can't figure out what's the reason behind the rally that you're seeing. It can't simply be because few projects here and there got completely sold out.
Well, that itself is a decent reason, isn't it? When things were not selling to compare, a few months back to selling out quickly itself is a good pointer to the market. And remember, markets don't require a huge amount of good news to do well. What the markets need, by and large, is that for a very bad situation to turn moderately bad. So very awful becoming semi bad or just bad itself is good enough, let alone it becoming good. Here in real estate, you can see, and the case can be made that what are the asset classes available in India, right? So you have gold, you have real estate, you have equity markets, you have fixed income. Fixed income, there is clearly no, upside. There's probably downside at the, you can conjecture that. Gold is not going anywhere because crypto has emerged as a big, alternate asset class for people, wanting alternates away from the US dollar. So what is left is equities and real estate, two major asset classes in India. Equities have done phenomenally well. Real estate, because of COVID, really tanked. So there is a rotational trade that was available, which is exactly why we bought DLF. That look, equity markets doing well when people have got more money, and when people have more money, they want to buy the safety and security of a home. At least many people want to do that, which will mean that inventories will get cleared out somewhat, at least, which is exactly what you're talking about. So money made from stock market inevitably finds its way into the real estate market, and which is probably where you are in the cycle right now. And it will always be a lagged effect. You need like 12, 15 months of solid equity gains, and then the needle starts to turn a bit into real estate. We are exactly at that point right now.
And also, when real estate, when there's a bull run, you see, it's not like for a few weeks or a few months. It's usually a multi-year bull run, right? And this is the first one, got the makings of a first one that we likely to see since Lehman Brothers. So you think that this pocket is a safer pocket to invest in for a couple of more months at least?
I thought you said long term. Long term is now defined as 2 months, is it?
I said few months.
Okay. No, so you're absolutely right. The point is, cycles take a while to form, and then they take a while to play out. Okay, I'm talking big asset class cycles. I'm not talking individual stocks, which can be very volatile. So I spoke about the equity cycle, which was very low and then upturned from last year. Real estate has been in the doldrums in India for God knows how many years, right? That has just started to perk up. So it would be foolhardy to call an end to that, because it is coming out of a very, very long spell again in wilderness. So, a DLF or a Godrej Properties, etc., they will benefit from a big macro trend into real estate. And these are super tankers. They don't move around very quickly either way, in a good way or a bad way. So they've started moving now in a good way. I don't think it's going to just peter out in 2 months' time. I think you're looking at a fairly structural move up in real estate, given strong equity markets, which is all good news for these companies.
Right. Shankar, you were talking about Inox as well briefly, and one can see that there's something very interesting happening in this reopen trade, if I can classify these names as that. I mean, PVR literally, dekhte, it's 1500. I was just looking at the Indian Hotels share price. It's 175 plus now. Inox you talked about. Even some of the other platform plays like an Ease My Trip, etc., doing very well. Is there a meaty move here that one can cash in on?
Yeah. I mean, again, let's not get too fussed about an immediate move, because one of the biggest tendencies we have is that abhi to bahut chal gaya, abhi kya lena hai, 20% up ho gaya, 30%. Stocks have infinite room on the upside. They have only finite room on the downside. And, coming from you should take it seriously, because I made a lot of money on the upside, but also equally on the downsides. So when you understand, again, big cycles, you should realize that actually sometimes a good up move like an Inox or a PVR or all these kind of, or even a DLF, is a better time to buy than to have bought it, maybe 6 months back or 8 months back, because then it was way too early. So as I always say, one should be only one step ahead of the market, not 100 steps ahead, because when you are 100 steps ahead of the market, you are too early into the trade, which means a period of pain and a period of watching the world go by while your stocks are not moving. So you should be just slightly ahead. I think it's actually a pretty good time even now to buy a lot of real estate or these opening up trades, because they've just started to gain traction. What's the downside in a multiplex company? They have seen the worst possible time in that business. Things can only get better. Instead of 0 customers, if you have 10 customers, that's like, 10x of what you were, a year back. I think it's all good for them.
Sure. You know what you said about or kitna badhega, one questions that about sectors like metals and IT. And I want to talk about IT first. Be it the Accenture guidance which came out, and historically they don't even give a guidance, but the FY22 guidance has been set at 12 to 15% on constant currency terms, be it chatter from a Tech Mahindra, from an HCL Tech, or the commentary coming in from Wipro. They all point to a multi-year bull cycle. But how much of it is already digested in the stock price? Because each time you think IT is not going to go anywhere more, or how much can it go more than this, it continues to rise up.
So in IT, I think, obviously it's one of the industries India has a big competitive edge in. Pharma used to be that. We lost it to China when the bulk drugs got exported to China. Now, in some senses, API trade brings a bit of their business back to India. So India has, competitive edge as a nation in IT services. So there will be wobbles. We saw when the cloud started to gain traction in 15, 16, there was a wobble. There were doubts. I was one of the doubters that whether Indian IT can overcome the challenges of a cloud and overcome it. But one thing I do believe in, and that's just I've been a big observer of this industry for 25 years. This is arguably the best set of managements you can find in India. They are clean, they are focused, they are brilliant on execution, great thinkers, great strategy. Forget about products and all that. That's a different kettle of fish. But on what they do, they are flawless or near flawless. When you have a set of companies in the large cap and now increasingly in the mid-cap IT spaces, which are so good, who have managed to overcome so many challenges, visa problems, cloud problem, you have to take, I'm not saying a blind bet, but a reasonable bet that these stocks will still give you decent returns in the future. And they're not expensive by any stretch. They are not valued like tech companies. They're still valued as manufacturing companies. They are still valued like specialty chemicals companies. They're not valued like a Zomato. So why should we start cribbing about whatever 30 times earning, 35 times earning? These are damn good businesses, great management, great governance. I think you can still make serious money in these.
Yeah, IT has clearly been the winner, hasn't it? But when we're talking about this, Shankar, the other pocket which is considered expensive is consumption. Now, consumption is also going up. Where do you stand where this story goes? Look at a stock like ITC, even that, has managed to move.
I knew that was coming. So yeah, it's gone up 15%, which is like the equivalent of 500% for most other stocks in the market. So the whole street is delirious that an immovable asset has become a movable asset. So, ITC was considered an immovable asset all through last year and most of this year. So look, consumption India is a billion consumer market. There will be times when these stocks won't do well. There will be times when they do well. In a mad bull market, these stocks will not do well. They might do well in an absolute sense. You will make some money. Lever has gone up from 2,200 to 27, 2,800. But in a mad bull market, you're not going to make outsized returns in these companies. These companies are actually more stable state market scenario companies, or even a bear market scenario companies. But you're not going to end up making 25, 30% CAGR in these companies in the kind of bull market we are in right now. Here, you're better off going a little bit away from the traditional, the consumer companies. Those are not going to make you seriously rich from this point. They might not make you poor, as some small caps might, but they're not going to make you buy a penthouse. No way.
Okay, so the stocks you have to look out for which will make us buy a penthouse, even as real estate prices are starting to appreciate. So that should certainly be one of the ambitions of our viewers who are tuning in. But Shankar Sharma, you used the phrase mad bull market run. So I want to talk to you a little bit about that. This easy money that's right now leaving China, India is clearly, one of the homes it's finding. Do you think that this is going to continue for a while? Because then, that's another way to look at it. The markets are only going to head one way, which is north, and at a time when you're also seeing the retail participation go up.
Yeah, I mean, forget about money leaving China. China is a huge economy. It really doesn't care about a few dollars going away from it into India. India is relatively smaller. It will benefit, but I'm saying forget about SPIs. They don't matter. I've said this for the nth times that all these flow thing is all nonsense. Let's just focus on the market, the fundamentals and numbers, the economy. And on that front, a new force has emerged, which is the retail investor, as you mentioned. These are not the traditional retail investors who are gun shy or who are not very sophisticated, not very educated, who are really stock market speculators. This is a class of investors which is fairly smart. They're fairly clued in, and thanks to social media, thanks to Telegram, WhatsApp groups, the information dissemination is 100x of what we've experienced in our similar age periods of our lives. This is a pretty potent force. I mean, I don't know what the numbers are, right? They might be, I don't know, 10 lakh, 20 lakh, 50 lakh investors of this kind. But if average numbers that they're putting to the market is 25,000 or 50,000 rupees or a lakh of rupees, multiply that. I mean, you're talking a serious amount of money available and they're not going to buy Hindustan Lever. That much I can tell you. They're not going to buy Nation Trade. They're going to buy, the mid caps or the small caps, which are emerging. So for that size of investable money to walk into a bunch of small caps can have a disproportionate price impact, which is one of the reasons why you've seen kind of moves in small caps, which is really phenomenal, aided in no small part by this slew of money, which doesn't want to buy an HDFC bank, which doesn't want to buy a Kotak bank, doesn't want to buy the blue chips. They want to buy these companies because they want the penthouse. Okay. The old guys who are already in a penthouse don't want to lose the penthouse. So they won't buy a lever on HDFC Bank. These kids are on the streets. They want to go to the penthouse. They're not going to get there buying the old ones. They're going to buy more, let's say, riskier companies, emerging companies. It's a big, potent force. I mean, don't underestimate the power of this.
And Shankar, since you've always maintained that skin in the game doesn't matter, it's always skill in the game. So I want to know, where is it that you've put your skill to work and what is it that you've bought recently amongst these new age companies?
Yeah, so I mean, on a personal basis, I bought 1.5% of a company called Brightcom, which is an ad tech company. There's a company called Trade Desk in the US, which is I think 37 billion market cap company, similar business. Again, I don't want to talk it up. I mean, if you ask me, it's been a recent investment in the last 15 days or so. And the whole space is, again, forgetting the stock for the minute, it is a sector or a space which is buzzing because, the entire business of advertising gradually, is moving online. And as you all know, and because of that potent move, and thanks to COVID that has accelerated, then companies which are in the middle of matching buyers and sellers are a great place to be in. And that's what ad tech does. So, that's an interesting play. We'll see how it pans out. Stock's been doing well lately. So, yeah, I mean, that's where I put my personal money in.
Interesting. Given that, Shankar, you're a market cap agnostic investor, you don't look at whether it's a large cap or a small cap or a mid cap, right? You go by company fundamentals and the valuations the stock are quoting at and what opportunities they throw up. In this market, where is it that you've actually taken profits off the table or sold the stocks?
So, you're spoiled for choice. You can take profits off the table for practically everything other than HDFC Bank, which has made no profits for anybody in the last 12 months. So, as long as you avoided that, you are in very good shape. So you can trim. So what we did was we trimmed a bit instead of trying to be too finessed about it. We trimmed a bit from every place and put them into the DLFs and the JSW Energies and all these companies which were laggards in the first phase. We just shaved off. It's literally shaving off, not really large scale shifts in the strategy. that is good enough to, give you a bit of alpha over the markets. So it's not been selling a Tata Elxsi off or selling a Mindtree off or selling a Happiest. That superb company doing phenomenally well. You don't want to get rid of them. But just because they have gone up so much that they become a bigger part of the portfolio, so just do some shaving. That's all you need to do. And take that money into these kinds of companies.
Shankar Sharma, I want to ask you one thing about all the new age IPOs that are going to be coming up. Now they say you must have them in your portfolio, but there's no right way, or we haven't figured out yet how much to have in the portfolio because it's all new for all of us, right? I know what you said in the past about Zomato, but with so many more that are coming, what are your views?
I love them. I mean, I think it's a great time for the Indian market ecosystem to absorb these companies. Said this many times, they were getting exported or they would have gotten exported to NASDAQ of the world. These companies belong here. They have grown here. They're 90% of the businesses are in India. They deserve to be listed in India and NASDAQ. Who knows about Zomato or who knows about Nike or any of those companies? Right here, they're good, well-known brand names. Market was never accepting of these companies before because Indian markets hate loss-making companies. But now it's just been a paradigm shift that markets are welcoming loss-making companies in the hope that someday they'll become profitable. So the valuation parameters are now similar to what you would get if you listed on the NASDAQ, which is such a huge momentous change in the way Indians have approached investing. I mean, it is inconceivable that even as recently as 3 years back, Indians would have loved, Zomato or any of the newer age companies that are listing. But now, hey, they're being welcomed with open arms. I just think it is a great time in Indian capital market history, akin to the Dhirubhai Ambani taking equity cult to average small investor in 1977 when the Reliance IPO happened. I think it's something equivalent to that. I'm really enthused about this.
So, do you think the Nifty and the Sensex will look very, very different in a couple of years from now, and that it'll have a lot of these companies as part of them?
Not so soon. I think the index criteria are fairly stringent. I think I don't think any of these companies will make it in the next 2 years. But hey, if you're taking a 10-year view, it will be a vastly different index pie chart for sure. I mean, you will not find banks having 40% in the Nifty or the Sensex. No way. There will be newer age companies, but not in 2 years. In 5, 7, 8 years' time, you will find like the whole pie chart is altered completely, which is all for the better. Altering pie chart of market shows newer companies coming into the index categories, which shows innovation, which shows a vibrant, IPO market. Otherwise, the same old HDFC banks, and the levers, we have been old and I mean, from the time I started my career, I've seen the same damn companies in these indexes. It's high time we got fresh blood into the team.
We'll definitely play that soundbite up, Shankar. But let's begin winding up the show. Tell us how you're celebrating. Are you in Dubai, Mumbai? Where are you?
Yeah, very much in Dubai. Hoping to get back for a few days to Mumbai. So yeah, look you guys up. If you buy me lunch.
Absolutely, anytime. Couple of new places have opened here in Mumbai. But Shankar, we can't let you go without either a sher o shairi or some song, something. I mean, 60K banta hai.
जब रात है ऐसी मतवाली तो सुबह का आलम क्या होगा फिर सुबह का आलम क्या होगा तो if this is just the beginning of a bull market, what does the dawn of a new bull market look like?
Absolutely. Bang on point. Shankar, always a pleasure speaking with you. Thank you so much.
Likewise. Take care.